All right, guys, I am back with the second, what I'm going to call the essential videos that you have to watch. So the first one is going to be the risk management. The second one is over FOMO. These two videos are extremely important and you absolutely have to watch and understand this before we can do anything else. Okay, it's very important. So let's go ahead and get into it. FOMO. What does FOMO mean? FOMO means the fear of missing out. Okay, the fear of missing out. That's the feeling you have, probably all of you who are in this group for the last months, when you keep seeing crypto go up and all your friends making all this money and you're over here like, damn, I need to get in this market too. I got to make some money too. I'm going to throw whatever I have so I can also make money, right? The fear of missing out. You're going to get that all the time while you're trading. Your job, though, as a trader is to be very patient and disciplined and systematic. FOMO is an emotion. Emotions do not belong in trading. Emotions are what's going to get you burned. You have to be systematic and work on logic only. All right. I'm going to explain as to why FOMO is so dangerous and why you need to really try your hardest to mitigate it. So what I've done right here is the same thing as the risk management, right? Same sort of setup. We have our R&R set up. I'm going to adjust it a little bit. Okay. This is a very simple trade pattern. I'm just going to go over really, really simple. So you have an up, a high, a low, a higher high, and you're establishing a lower low. So what do you want to do? You're like, I want to get in this on this market. I think there's a change in market structure. I think I have a lot of opportunity here. So you're over here adjusting you're doing what a good trader does, trying to make it to where you get the best entry you can. So you're going to put it right about here. But here's what happens in the market. The market says, no, we're going to keep going up. You're like, shit, I need that. I want this market. This is the market I want. What am I doing, right? And it keeps going up. And it keeps going up. So you're like, okay, cool. Screw it. I'm going to buy. I don't want to miss this. I'm buying. And you buy right here. Here's the problem, though. Your target is still the same. Just like we said in the previous video. Your target does not move. So this is a static position that you have made because you have something in the market that tells you this is where this is going to get to, right? Right now, if you got the entry right here, you would have gotten it at 4.57 R to R. That's really good. However, this little amount right here decreases your R to R up to 1.45, which is way under the 2 that we're requiring for a trade to be decent. So, once again, this great trade opportunity. This is not. Despite the fact that this looks bullish, your target has not changed. So just this little amount of movement makes a massive difference, okay? You have to really just understand that if you don't get an entry, no worries. It's okay. Don't stress, okay? Instead, what you want to do, I'm going to move this over a little bit. This target remains the same. Nothing's really changing here. What you can do now is wait for the same opportunity to come around and wait for it to come back down and reestablish another trend, okay? So what you do, you come back over here. There you are. There we are. You're going to enter the position right here, but since you have a new stop loss that makes sense, you can now move your stop loss up to right here. And look at that. If you enter here and we're more patient and wait for it to have a proper retracement and establish that trend appropriately, you now have a 5 risk to reward, which is even better than the original one. Okay, because this right here would be a change in market structure. And you're going to go ahead and say, this is my new stop loss, the same target, new stop loss, new position. So by waiting a little bit, waiting for a proper retracement, you now are getting in at 5 instead of getting in at 1.5, which would have been a really, really bad trade for you. Okay, this is if you want to keep with the same chart. Now, the next thing you have to understand, there are a lot of times where if you wait on a market, you just miss the opportunity. Cool. Okay, it sucks. All right, I've missed plenty of opportunities. Rune, great one. Lend, great one. AAVE, same thing, but I missed that entire movement. A lot of the DeFi stuff, I missed a lot of that. Nano last night popped off by like 300%. I missed that. Great, right? Okay, I'm not stressed. I don't care because it doesn't matter if I miss these movements. I will just go back, study that chart, see what I missed, and then try to get it up later. No worries. I don't stress about that. You just go to the next chart. It's very important, all right? And I'm going to help demonstrate this real quick. Like right now, Bitcoin's crashing. Well, I say crashing, actually went down and it tapped it, came back up, right? Even though Bitcoin was dropping in price, Algo actually went up, okay? It went up, and it's retesting this 12-hour breaker. It's probably going to continue upward, okay? These markets do not all move in the same time, the same manner. Litecoin is breaking out of a year-long descending wedge pattern. That's really bullish, okay? So just because some, and then of course you have Doge, right? Doge went absolutely insane over the last, 3 days or so. It's been absolutely insane, right? I missed a lot of this movement. That's cool. The thing I'm trying to show you here is that just because you miss one opportunity doesn't mean there are not other opportunities out there. Be patient, keep scanning the market, setting up your positions. All these charts look different, okay? And this is for a good reason. They look similar in some aspects, but they look different. They're all popping off at different times. If you miss one, don't stress. Maybe you'll catch a decent retracement, or just go to the next one and find your next opportunity. There is infinite number of opportunities in the market, in the crypto, in stocks, in commodities, any of these things. Things pop off at different times. Just because you missed the bull run doesn't mean you can't get in on other opportunities. It's okay. Now I'm going to show you an example of why I did a certain movement, and I'm sure I probably got a lot of slack. You guys thought I was stupid for what I did, but I'm going to really explain as to why I did it, and it was to ensure I didn't let FOMO calculate or FOMO take in and overcome my logic on here. So Doge, great opportunity. I missed, so here's my situation on this. Let's go to the daily chart real quick. I've been in Doge since around, I think like a tenth of a penny, remember correctly. Around a tenth of a penny, or like 3/10 of a penny, I think that's what it was. 3/10 of a penny, I got into Doge, okay? I rode this entire market up and it went really, really well, right? So I used a very simple tool called a Fibonacci extension tool to find me some decent targets. So what I did is I went on here to the Fibonacci extension tool from the low to the high to the low and got me some decent targets. Usually you want the 1-to-1 ratio and a 1-to-1.68 ratio. And I also went the 2.618 because that's for my extended targets. So as you can see, 12 cents, 17 cents, and 25 cents. So what did I do? I had bids, and I'll show you real quick. Back here, April 13th, so 4 days ago, I put on here. I have sells set from 12 cents to 24 cents. Why? Because that makes sense for the Fibonacci extension ratios. 12 cents, 17 cents, and 25 cents. That is the most, those are the most likely places for this to have some serious resistance and for me to take profit. I'm systematic in what I'm doing. So when we start getting up there, I started taking away profit, and I actually sold a lot lower than I could have. Most of my positions were sold down here at the 1-to-1 ratio, and I got a little bit at the 1.168 ratio. I didn't get any up here because I didn't think it was going to get that high, honestly. The reason why? Because you have this massive decrease in volume and also the bearish divergences. So I made the decision to pull out to take more profit and put it into something that has not taken off yet, such as Litecoin, for instance. I think it has a lot of potential. Did I miss 100% profits? Yes. Yes, I did. Absolutely, right? If I would have held that, I easily would have gotten to the 200% on this movement, and that would have been great. However, it was not guaranteed. I've already met my target. Like I told you guys on the when you are doing your long positions, you need to have your target set. Okay, you need to have your target set and have it for a damn good reason. So I had my target set. It made sense to me. I had my stop loss set, and I had a really good R to R ratio, and it made sense to me. So whenever I started getting close to my target, I didn't adjust my target. That's not how this game is played, okay? That's called FOMO. That's getting caught up in the emotion. I made a decision in the past for a damn good reason, so why would I change my decision? It doesn't make sense, okay? Could I have changed my position, like taken profit on that and then added a different position? Absolutely. But my original target was decided upon because of a specific condition in the market, and I stuck to my plan. All right. So here's the other thing about this. You guys are here pretty late in the market. I'm not gonna lie. I don't know how much longer we have to go, but I do know that if I go to the daily, let's go to not so ugly chart. All right, not nearly as ugly. Okay, you guys are here pretty late. This is Bitcoin. Okay, I originally got in here at $8,000 down here. I rode the market up, rode the market down, and now we're way the hell up here, right? And I was adding position all in this area down here. Right, great. So you guys have missed out on probably about 2,000% gain, give or take. Let me do a little math real quick. Let's say from the bottom to the top, 1,100% gain, okay? You guys have missed out on a 10x so far on the Bitcoin pairing, right? It sucks. There's nothing we can do to fix that. That's just how it is. But here's the big thing about this. Don't get caught up in only making money on an uptrend, okay? Don't think like that. Don't think that if I don't make the money when it's going up, I can't make money. You can also make money when a market's going down. And I'm a great example of that. So I got in at 8,000. It went up to here in my last, so a vast majority of the time when I was in the market has been during a bear trend. This is where I'm the best at. I actually feel uncomfortable when the money is increasing very, very rapidly, because this is something I'm not really used to. I'm used to making money on these little bounces. Okay, those are all really, really good opportunities, and it's a whole different style of trading. You can also short sell the market, which we'll be getting into once that opportunity arises. You can make money going up. You can make money going down. Traders like volatility. So when the price is going down, that means that we are getting coins for cheaper, and we also have a lot more short sell opportunities. When a market is stagnant, nothing's actually happening, that's when we can't make any money and it sucks. So crypto is amazing because it goes up and down and up and down and all those good things very rapidly. That's where we make opportunities. So I hope that makes sense, guys. There is a lot that... So the big point of this video is to ensure you guys fully grasp FOMO is extremely dangerous. FOMO will get you burned at an extreme level. This is how you're going to have all your friends and family over there who are losing so much money because they throw money at the top, or throw money at the top, or sell at every single crash and all that. Have a plan and stick to that plan. When you start trading without having a plan, you are trading on hope and you're trading on emotion. When you trade on emotion, you will get burned. It's not a question of if, it is when. You will get burned. And a lot of guys will get burned very, very harshly. So remember, take all emotion out of your decision making. Only use logic, okay? I think that covers everything I want to go over in this video. These last two are absolutely essential. Make sure you fully grasp it and do a lot of research on these two topics. Our next one is going to be going over technical analysis versus fundamental analysis versus news and all that good stuff. So yeah, I think that basically sums it up. If you guys have any questions, of course, like always, let me know, and I'll see you in the next one.